So you might have noticed the stock market is down. The ASX has dropped nearly 500 points since its high at the end of October, where it was hitting over 9,000 points. Today, as of filming, it's around 8,500 points. So there are many reasons for the decline, and these declines are global, not just in Australia. But the news reports are doing a very good job of explaining why. I'd rather talk about what we should be doing right now instead. Now, if you're a good little investor, you know that the stock market moves in cycles. So it's never a good idea to panic, no matter where we are in the market. Even though I do still get slightly annoyed when my portfolio value goes down, it is not always a good ego boost to see those numbers decline. How rude. But the key to being able to still sip those non-alcoholic martinis and not worry too much about the market is to know the cycle that we're in. So I thought I would share an analogy of how I view the market overall. I think it might help. I generally like to look at the stock market cycles as seasons. So summer, autumn, winter, and spring. Obviously, the stock market seasons don't follow our actual seasons. The stock market has its own patterns, but it is cyclical in nature. Also, the stock market seasons aren't specific lengths. A season, or the way I view the seasons, they could be lasting a week, a month, or even years. There's no set time frame to each season. So let me explain how I view each season of the stock market. This year, mostly we've been in the summer season. This is where everyone is happy, the sun is shining, prices are going up, dividends are strong, investors are happy overall. It's everybody's favorite season in the stock market. So we've been in a summer season of the stock market since about May this year. It's been pretty great because summer is fun and sometimes investing is fun too. But that changed at the end of October. We are now what I consider autumn, or fall as many people like to call it, which is actually quite apt because I see autumn as the time when stock prices are falling. Things are turning colder, investor sentiment isn't as warm as it was in the summer season. People's sentiments are just preparing for a cold winter stock market. So autumn in my head is the one that most people get upset about because they're not prepared for it and they've just come out of a nice, fun summer season. So I'll talk about what investors should do in an autumn season of the stock market next, but let's quickly go over what winter and spring are as well. So winter for me is not so much when the prices are falling because that's autumn for me. Winter is when things are just a little bit more pessimistic and not a lot is happening. Everything seems to have slowed down and there isn't much price movement up or down. It's like the market is holding its breath and it's become more reflective. So depending on what else is happening in the economy at the time, winter can either go really fast and disappear in a matter of weeks, or it can last a really long time. Because winter tends to be slower. It tends to be the most boring time of the stock market. Not much is happening. And then there's spring. Spring is fun. People are starting to get a little bit more optimistic again. Prices aren't moving quite as fast as in summer, but they do tend to go up. Relatively slowly though. There is new enthusiasm, but people are still a bit cautious. But also it can be a little bit exciting because there could be some new opportunities and growth is about to happen. I actually think spring is the best time to buy in the stock market, but anytime you can buy. So let's talk about autumn specifically, the season that I think we're in right now. So since autumn is about falling prices, you need to think of your autumn strategy as a long-term solution. Unless you're shorting stocks, which isn't a strategy that I'm especially good at, I tend to prefer that lazy dividend approach of just waiting. And yes, dividends are going to be paid no matter what the market is doing. Should you buy though? Maybe. It's usually going to take longer for the price to recover, but it's still a good time when the stocks are falling in price because that's what we consider a sale. But this is especially so for dividend investors because you can pick up some really good, financially strong companies at a lot lower price. There are a few very stable banks that have fallen about 10% in the last month, which could be a good dividend buy, just so you can lock in a better yield from the jump. It's not a bad move. But if you're just starting out in the stock market, then doing the dollar cost averaging strategy is still good. It doesn't matter what cycle the stock market is in because you're buying more when the price is down and less when the price is up. So dollar cost averaging is always a good strategy no matter what season we're in. But it isn't a time to panic. It's never a time to panic. It is a good time, however, to learn patience because the stock market sometimes is a patience game. The prices will go back up. Not every company, of course, but the prices overall do go up over the long term. And that's why we love it. I generally think that autumn is not a great time to sell though. It's hard to know when the prices are bottoming out and it's likely that they're just going to fall while you're selling anyway. I don't tend to sell anyway as a dividend investor because the more stocks I hold, the more money I get as dividends. But out of all of the seasons, I think autumn is the worst time to sell, mostly because in autumn the prices can be unpredictable and chaotic, whereas in winter, even though they've bottomed out and they're low, it's a lot more stable. But autumn in the stock market is also a time when sometimes companies can fail and sometimes bubbles can burst, especially if there has been a bubble in the last summer season. Has there been a bubble though? Let's think about a sector that's been overly hyped and people have been talking about a lot that has no underlying financial history behind it. As always, be careful of any business model that doesn't have a strong history, and most people are hyping it up because of trends and what they think might happen rather than based on actual data. Boring investing tends to be way more stable and better long term, even if it isn't quite as exciting. Happy autumn.